Hi everyone, hope you're all doing well. Today we're going to talk about this stock that a lot of you guys have been requesting for a really long time. I would say even up to 2 years. You guys have been waiting for a video on this one, which is Team 17. Team 17 is a UK gaming publisher and developer of games or indie games, and we're going to be taking a look at this one because you guys have been requesting this big time. And as well as that, in this kind of stock market crash that we're having at the moment, this bear market, we've talked about it plenty of times on some other stocks, but there's plenty of stocks out there that are crashing huge amounts. This being a UK stock that's crashing huge amounts, and today we're going to dedicate a video to it and if I would potentially buy this one. So I hope you enjoy the video and we'll take a look. Today's video is sponsored by the stockbroker Habit Trade. It is licensed with the ASIC and regulated by them. Client assets are also held and kept separate from Habit Trade's own funds. Funds security, all the client assets are saved and protected by Coinbase and Signature Bank. On Habit Trade, you are able to buy from multiple markets. You can also deposit by USDT, the first app to support buying stocks via crypto. And the Habit Trader app is really easy to use, as you can see here. It's a very clean design. If I want to switch between stocks and crypto, I just need to change the tab at the top, and you can see I've got a watch list of stocks here. Now, I get any upcoming news that may affect me on the little scrolling tab, as you can see here. So it's telling me the stock market is shut today in the US. And if I want to get any more detailed news, I can switch to the news tab, which is really easy to do. And as well as having that news tab there, one thing that I really do love about this platform is the combination of stocks you can invest in. So I can switch to a combo of stocks. So I have a list down here that I can scroll through, a couple of pies of investing stocks that I potentially would want to invest in. And if I could scroll across to, say, the metaverse, and if I want to have exposure on the metaverse, I can buy that combination of stocks here. If I want to see more details on what is in that combination of stocks, all I do is I need to just click on that little circle there, and it'll show me which stocks are in this combination of stocks here if I want to have exposure to multiple stocks. There is also no minimum deposit amount with quick and easy withdrawal. And to set up an account as well, it is very easy, and you can set up an account through downloading the app through the App Store, or it is available on Android as well. Thanks to Habit Trade for sponsoring today's video. Now, first off, I am going to say this, I am making this video at a pretty bad time actually, because they're actually going to be bringing out their Analyst and Investor Day and their results for the last 6 months ended 30th of June on Tuesday the 13th of September, which is next week. So some of this information could quite quickly go out of date next week. But yeah, a lot of you guys I think have been wanting to see this video, so I thought let's just get this one done. And first of all, obviously this is a gaming company. Obviously we know there's been a massive boom through 2020 in the gaming industry into kind of 2021, and then we've seen a bit of a slowdown. But previously to that, the gaming industry has been absolutely explosive, and it is still forecast to go on explosive runs in the next few years once we've had the kind of cool down from the CV numbers. But it's a massive growing industry. Believe it or not, the gaming industry is actually bigger than the movie and I believe it's the music industry combined, which is insane to be looking at that. And the good thing to see actually is that we've seen a boom with a lot of these gaming companies at the moment. A lot of them are having slowdown, and a lot of them are having impacts at the moment, but they are forecast to kind of recover once they go past these tough comps. I'm going to very quickly, we're going to do a bit of a deeper dive into the financials actually in a few more minutes, but I want to say the really impressive thing with Team 17 is that when we've seen a lot of these companies really benefit from the CV situation. So if we look at kind of that 2020 period, or June 2019, you can see the big jump in revenue that they've had now is, you know, there's a massive jump in revenue, massive jump in profit. But the thing is, well, with this business is that even though there's tough comps going on, this company just has such a good track record of just nicely ticking up on that revenue and nicely ticking up on that profit as well, which is really impressive to see. It's a constant, it's got a really good history of constantly delivering, even in this period of time where a lot of other gaming companies are struggling. You're seeing them just nicely have this uptrend, which is a really good track history that this company has of delivering on the results they say they're going to do. So Team 17 is a indie or independent developer and publisher of games. They're a UK business founded in 1990, so it's got a long track history of developing these games. It's based in Wakefield, and it publishes a lot of games, and it also develops some games like Worms. I'm sure you will have at some point played the game Worms. And past Worms have got a lot of other titles as well. One of the recent titles is Lego Duplo Marvel, which was obviously you can see here on the Google Play. This actually was a game that actually did quite well. I think it's the most successful game to date, and you can see here that they currently have 4.4 stars review on this recent game as well, which is a really impressive amount of reviews there. And they've also made a string of acquisitions recently, so I think this is really what's supporting a lot of the revenue growth and profit growth at the moment. I think if it was, this is probably why we're going to see this big jump here going through this year into 2022. This is supported by a lot of acquisitions here, which is fair enough. They've had the benefit from the CV, they have an amazing balance sheet, which we'll look at in a minute. They generate a lot of cash, and they've done that to invest into a lot of acquisitions, and that has basically given them the revenue growth and profit growth, and should give them more titles to carry on going forward in the next few years. And if we look at the latest trading update, which was on the 14th of July, you can see here that Story Toys was acquired in 2021, and this was the launch of Lego Duplo Marvel in December 2021, which, as you can see here, they say it's the biggest to date and continue to perform in H1. And you can see here they also have subscription revenue as well on this, which is quite interesting to see them moving towards that model. They've also bought, or they acquired Astrodragon, I think I said that right. They acquired that in 2022, and that has a lot of simulation games. So one of the new simulation games, as you can see here, is the construction simulator that they have. A lot of these are really popular. And they also acquired the label in January 2022 as well, which they have integrated into the business as well. And overall, towards the back end of the year, there is a lot of game launches actually coming up with the business. And actually, if you go onto the website here, you'll actually see some of the new games that are coming up on the featured games. These are some of the new launches that are coming into the back end of the year, which they are hoping to really drive up that revenue at the back end of the year, as typically a lot of games do come out in that period of time. And you can see on the outlook point of view, it looks pretty solid. The group said they've got a high quality portfolio of new releases planned for the second half of the year, ones which I've just kind of showed you on this screen there. They said that the latest version of Construction Simulator, which we showed early, just a little bit earlier, launches on 20th of September 2022. So that is one of the new big launches that are coming out. Bus Simulator is also coming on mobile and Switch in the second half, and also Patrol Officers in the back end of the year as well. These are also some of the other launches. So this one here, Marauders, which we just showed a little bit earlier, which is saying is tracking above any previously launched game title on internal metrics, and also Themacia, I think that's how you say it, which is a soul-like indie game, is also coming out. And also it's worth mentioning that actually the year before, they actually bought another company, which was Golf With Your Friends as well. That was actually in 2021. I think they acquired that overall. And you can see a quick quote here that the CEO basically said, "I'm delighted with this Team 17's first hard performance, trading in line with our expectations. Pleasingly, our new acquisitions have worked really well." So it looks like the group is pretty much trading in line at the moment. It'd be very key towards this back end of the year to see if that's still happening, if the game releases are still doing well, and also if that Russia and Ukraine situation does impact them a little bit on the sales point of view. But it looks like they've made some really good acquisitions here, and the company's performing in line as well going forward. And it looks like a pretty strong business at the moment. Now, if we do switch over to the financials, it does trade at a 21 times earnings, which isn't too bad. It's around about the market average. And like we said previously, this company has a fantastic track record of growing that revenue and growing that profit. And if we do look at future growth and analyst forecasts, there's actually quite a few analysts covering this stock because it's quite a decent size for a UK company. And you can see here they are expecting a big jump in profit and revenue. Obviously, that's driven by the acquisitions that we just showed earlier. And going forward, analysts are still pretty confident that they can deliver around about 10% revenue and profit growth, which is a high amount of growth really on profit and revenue point of view. So you'd automatically think that does deserve to trade at a premium. And when you do look at the track record and the acquisitions they have made, you would suggest that's probably more likely that they are going to be somewhere in that range. When we look at the financial health wise, they are very strong on the balance sheet. There's no debt on the balance sheet, as you can see here, and they do sit on 55 million in cash. Now that cash has gone down slightly compared to the year before. If we do look at the full financials previously, you can see here that they did come off the year with 9% revenue growth, gross profit up 16%, and you can see that cash did drop from 61 million. Obviously, that's to do with some of the acquisitions they made. Some of the acquisitions, you'll notice there's no debt on the balance sheet. So they did do that through raising capital through share dilution. So I'll shout that out now. I know a few people get really offended with share dilution. Honestly, I think if you do it right, it can always be a good thing and save you from debt on the balance sheet. And they did do that. And they also did that at ordinary shares of £7.14. And once again, when we look at the share price point of view, this stock is now down from £8.25 in July, and it's down 58%. So it's not a bad timing at all. And yeah, I think that's why a lot of people are looking at this, is because you look at this business here and you look financially, you look at the performance that it's had really since that prior CV times, 61 million in revenue, 16 in profit, and then we're talking about a business that basically in potentially a few months we could be talking 126 million in revenue. That's nearly double from there, and the profit as well, we could be looking at a pretty good jump in there in profit, nearly 10 million jump in profit. So yeah, a lot of people looking at this now going, okay, this business is roughly £3.57 and all that progress has been made, and it's nearly kind of the same sort of share price it was in the 22nd of November 2019. I think that's why a lot of people are getting interested in it. That crazy crash that we're having in the UK markets, it's giving them opportunity to buy a lot of these premium UK companies at the moment, and I would class this a premium UK company. It's got a good balance sheet, good growth, and it's having a massive dip right now. Yeah, so good track record of growth. Looks like we're going to have good growth going forward. Good balance sheet as well, which we talked about. Ownership, there has been a fair bit of buying recently. It'll be good to see if we do get an updated point of view from here, if there's been more insider buying, but you can see here that basically everyone that you'd want to be buying. The CFO, the CEO's been buying shares as well. The lead director, the chairman of the board's been buying shares. Yeah. CFO again, which is really positive, and it's a founder-led company. I don't know why it doesn't say founder-led on Simple Wall Street, but Deborah Bestwick actually owns 21% of stake of the business, and she's buying at the moment, which is a really, really positive sign, which is great. So yeah, overall, you can see very good plan going forward with the acquisitions, new game launches, history, really good delivery on numbers. Great balance sheet. So I thought, let's run some numbers on this. So what I did is I had a quick look at some of the numbers. And I didn't put any buybacks in because I don't think they are currently buying back shares. If anyone in the comments that knows his business a bit more wants to correct me on that, go for it. But I put revenue growth of 4%, 7% and 10%. 10% being on the higher side, obviously. And I stuck the profit margin around 26%. As that's basically what they've been doing previously. If we do it on the past performance, 26, 26, 26, 26. 27 in fact there, 28 in fact there. The last time they had below that was around 2018. So I went at 26% profit margin, that they stay where they are. Obviously, potentially it could get a little bit higher, but I stuck there for now. And a multiple of 20. Now, obviously the big thing is that it trades at 20 now. Should it trade at a bit of a higher valuation because it has more growth, a great balance sheet? Potentially. We'll talk about that in a second. But at the moment, I'm getting 45% upside on the low side, 62% on the middle side, and on the high side, 82%. So obviously, for me personally, I'd love to get 100% return in the next kind of 5 years. So it's a little bit low, but below where I personally would want it. The big thing is if we have multiple expansion, that's the key thing. So for example, if we just change this to it trades at a multiple of 30 instead of 20, which can happen. One of the best books to read about multiple expansion is 100 Baggers. If we do trade at a bit of a richer valuation prior to, like right now, for example, it's normally traded at a bit more of a premium valuation. We actually get 118% upside, 144% upside, and 173% upside. So one of the key things is here is this going to have multiple expansion? Because if it does, this is a very cheap stock and it's worth buying. If it isn't, it's so-so at the moment, and that's the key thing to be looking at, and that's what I would be looking at as an investor. Do I believe at the moment the multiples it trades at is too cheap? If you do, it's probably a buy. If you think it's fair, maybe you're a bit unsure on it. So for me personally, I'm very 50-50 on it. I think it should trade at a higher valuation because it is a higher quality business. But one thing I'm seeing at the moment is a lot of stocks go to ridiculous valuations. I'm seeing stocks go to below CV levels. So this is kind of there, I would say. Potentially, if I could get this around about the £3 range, then I think that would be the point where I'd be like, okay, this is really tempting to be buying it. So I think that potentially might be an interesting point where I kind of go, okay, the risk to reward now is just absolutely bonkers. I have to pull the trigger on it. But yeah, at the moment, I have to rate it a buy. I think it's a good opportunity. I think if you buy this now, I think you would actually do really well from it. Personally, for me, I don't know if I'll run it a little bit lower, but yeah, I could see this doing, a really good performance here at the moment. I don't know personally if I'll run a bit more upside, But I think the key driver comes down to multiple expansion. I think, you know, the growth's going to be there. You're still, on the worst case scenario, you're still going to do okay. I think the big driver for this is if you believe that the valuation should trade at a lot higher multiples. And if you think that happens, and it does, then you're going to be absolutely laughing. If it stays at current multiples and grows, you'll still be okay. Not as good, but you'll still be okay. So I have to say it's a buy. I just don't know for me if I'd want it a tiny bit lower, but it's very high on my watch list right now, because I think that the fact that it's below CV levels is just absolutely crazy. And you can see the pipeline of the games that they've got going on. It is brilliant. And even though they've, you know, diluted shares to make these acquisitions, they're very good acquisitions that are going to drive that revenue and profit forward. So yeah, interesting. I'd love to know your guys' opinions down in the comment section. Do you think it's a buy? Would you own it? Do you own it? But yeah, it's definitely very high on my watch list at the moment. So yeah, that's Team 17. I think it's a fantastic business. And yeah, I think that it will have a very good future at the moment in these current share prices. So I hope you enjoyed the video, guys, and I'll catch you in a bit.